And U.S. oil isn't the only thing China is throwing overboard. They are selling U.S. bonds, that's U.S. debt, while at the same time they have their own increasing debt problems as the Chinese economy is slowing down. Some are reporting China's local governments are under a pile of debt amounting to roughly 40 trillion yuan. That's about 5.8 billion U.S. dollars. An S&P analyst was quoted as saying the potential amount of debt is an iceberg with titanic credit risk. And here to discuss the U.S. and China debts and debt in general and trade are the president of Euro-Pacific Capital, Peter Schiff, and RT correspondent and China expert Caleb Maupin. Gentlemen, welcome. Thank you. Peter, I've enjoyed being with you on the In Question program last week. I saw you were there earlier, but I want to take a little bit different tack today. You've spoken about the need to reduce government spending in the U.S., but I'm curious as to your take on how the economy would have done without this tax cut, without this sort of fuel injection sugar high.
Well, we may already be in recession. I think Trump was right. The economy was headed for a crash before he was elected, but all he did is kick the can down the road, and I think we're headed for a bigger crash now. You know, you mentioned the U.S. debt, how much it was up in the last fiscal year, but what everybody is overlooking is the increase in the national debt. While the official budget deficit was around $780 billion, the national debt increased by over $1.2 trillion during the same time period. And that's because a lot of what the government is borrowing, it doesn't count as part of the official budget. So it actually, borrows about 60% more than it's pretending to borrow. So the problem is far greater. The media is actually sugarcoating it. There's a lot of debt here, and this is during a supposed recovery when we're at peace. Imagine the enormity of the debts during the next recession, and one's coming a lot sooner than people think. So these deficits could skyrocket above $2 trillion a year.
That's so interesting. And I recall, and Peter, correct me if I get these numbers wrong, I remember the first debt limit increase. It was so controversial. And Secretary of Treasury Mnuchin, he really didn't want to go to the Hill because it was, right at that first year in December, and he didn't want to ask for something. At the same time, they were trying to get these tax cuts through. But I think it was increasing it to 19 trillion, somewhere, or above 19 trillion. And now it's like 23, right, Peter?
Well, I mean, it's above 21.5, not quite 22 yet. But again, that's just the funded portion of the deficit. That doesn't include all the unfunded, all the contingency liabilities that send that total north of, $100 trillion. And the other problem is the other side of the balance sheet. Nobody in America saves any money. I mean, we have no savings. People live paycheck to paycheck. So at least in China, you have a high personal savings rate. So debt is not as big a problem if you have savings to offset it. But in America, we need to, get money from the rest of the world. We need the Chinese to lend us their savings because we don't have any of our own. And the alternative is we just print the money. We go back to quantitative easing, which is where I think we're headed. And so the result of this ends up being a dollar crisis, where it's the U.S. dollar that is collapsing because of how many the Federal Reserve has to print to buy up all the bonds that the Chinese and everybody else no longer want.
Right. And Caleb, I'd like to say this is a tale of two different countries, but to some extent there are some similarities here. The story that I read about the debt rising in some of the local economies over in China, they are selling our bond, $3 billion worth of bonds of U.S. Treasuries. What's the strategy here for China, do you think, Caleb?
Well, Bart, the reason people are concerned about this is because any good economist will tell you that growth based on debt is not real economic growth. If I just go run up my credit card, that doesn't mean that I'm actually having an increase in my income. That just means I'm running up debt. And that's one of the major critiques of Keynesian economics, is they say, look, the government just spends money. That's not real economic growth. But if you look at the situation in China right now, it's very, very clear that they are experiencing real economic growth. I mean, even CNN admits that every single day another Chinese person becomes a millionaire. I mean, I'm here in New York City. There's not a day that goes by that I don't pass a crowd of Chinese tourists. And the world tourism industry is having a boom because so many Chinese people have become recently wealthy and are now going on vacation. Now, their GDP growth rate has slowed somewhat. It's not growing as fast as it was previously, but it's still much larger than ours. I mean, they're doing pretty well economically. They're continuing to grow. And we've also seen, there have been certain forces that have been predicting, this catastrophic Chinese collapse for a long time, for decades. In 2015, when the Chinese stock market went down, we saw the Chinese government swiftly swing into action, right? They froze all selling of state-owned enterprises. No shares were being sold there. And they had all the traders informed very, very quickly that they were caught short selling, that they would be arrested. And then within a week or so, the Chinese stock market was just where it had been before. They recovered dramatically from a really big downturn. So, I mean, essentially in China, you have a situation where the economy continues to grow, and when there are problems, the government steps in, takes action, and forces the economy to get better. It's kind of a different setup.
Well, one of the things that they're doing, guys, in China is that they're making these massive infrastructure improvements, and that means dollars in their Belt and Road Initiative. Caleb, you've helped us speak about that before. And I'm just curious, Peter, whether or not, when the then president or then candidate Trump was saying, look, we've got to do tax cuts and we've got to do infrastructure in the U.S., at that time, the highest point he was talking about, the highest amount was $1 trillion. Him and Hillary Clinton were both talking about $1 trillion in infrastructure. Would it have been better to, and you may say none, Peter, but would it have been better to do infrastructure as opposed to the tax cuts? Because wouldn't infrastructure have a longer-term helpful impact on economic growth?
Well, I doubt it. I mean, I'd rather see government spending cuts. And so if they spend
I knew you were going to go there, but if you
infrastructure,
had to choose between the two, Peter.
Well, look, infrastructure spending doesn't stimulate the economy. It's a drain on the economy in the short run. You have to finance it. So legitimately, you have to give up something else in order to divert resources to infrastructure. It only helps the economy in the long run, assuming that the infrastructure was worthwhile. But, when the government does things, it overpays for things, it overstaffs, it builds bridges to nowhere. So in many cases, you're just wasting money because there's no real economic benefit to be derived from the infrastructure. What I want is the U.S. government to get out of the way so that profit-seeking entrepreneurs can effectively allocate resources in a way that it's going to grow the economy. But when you're running these massive deficits, whether it's to pay for government spending or tax cuts, because we can't cut taxes and simultaneously grow government, because government has to be paid for. Taxes are just how we pay for government. But if we don't pay for it with taxes, we're going to pay through it through debt or inflation, which is just another form of tax, only it's more insidious and ultimately more damaging.
Absolutely. I thank you both so much for your time. We're better informed because of both of you. Thank you, guys. Peter Schiff, the CEO and Chief Global Strategist for Euro-Pacific Capital, and RT correspondent and China expert Caleb Maupin. Thanks, guys.
Thank you.